Oil didn't just drop for no reason. It dropped because one key assumption in the market suddenly changed. For weeks, oil prices were going up. Why? Because of fear. Fear of escalation. Fear of supply disruption. Especially around the US-Iran situation. When there's tension in the Middle East, markets immediately price in one thing: less oil supply in the future. That's why prices were rising, not because oil was disappearing, but because traders expected it might. But then, that expectation broke. News of a temporary de-escalation, a possible 2-week ceasefire window, changed everything. Suddenly, the market went from "there might be a supply shock" to "maybe supply will stay normal after all." And when that happens, prices don't slowly adjust, they snap. That's the first reason. Expectations reversed. The second reason is just as important. Oil was already stretched. When market goes up too fast, too many traders pile in on the same side. In this case, betting that oil would keep going higher. That creates something fragile, because the moment the story changes, everyone tries to exit at the same time. So when the ceasefire news hit, it wasn't just a normal reaction. It triggered a wave of selling, traders closing positions, taking profits, cutting risk. And that's how you get a 10, even 15% drop in a single day. So the move wasn't random. It was a combination of expectations flipping and a crowded trade unwinding. And here's the part most people miss. Nothing physically changed overnight. Oil supply didn't suddenly flood the market. Only one thing changed: belief. And in markets, belief moves faster than reality. That's why oil prices can rise on fear and collapse on relief. But here's where it gets more interesting. Most people think this move means oil is now cheap, or that the situation is over. That's not necessarily true, because the same factor that caused the drop can reverse again. If tensions come back, new risks appear, or the ceasefire fails, the entire narrative flips again, and oil can move up just as fast as it moved down. So this isn't the end of volatility. It's actually a sign of how sensitive the market is right now. And this leads to the next question. What happens next? Right now, traders are watching one thing: whether the de-escalation actually holds. If it does, oil could stabilize, or even drift lower. But if it doesn't, and fear comes back into the market, you could see another sharp move upward. And this is why these kinds of drops are so important, because they don't just affect oil, they affect inflation expectations, stock markets, and even central bank decisions. Lower oil can mean lower inflation pressure, which can then influence interest rates and overall market sentiment. So, a move like this isn't just about energy. It's about the entire financial system reacting to changing expectations. And if you understand that, you start to see markets differently. So the next time you see a sudden drop like this, don't just ask, "What happened?" Ask, "What did people believe before, and what changed?" Because that shift is where the real opportunity is.